My dear students, today let us do a practical problem from the module Capital Gain. Let us read the question. Date of purchase 2nd May 1997. Cost of acquisition Rs 3,80,000. Cost of additional construction in 1999 20,000. Fair market value as on 1/4/2001 3,50,000. Cost of additional construction in 2013-14 rupees 3 lakh. Sold the property in January 2020 rupees 12 lakh. Selling expenses rupees 25,000. Cost inflation indexes are also given. Compute taxable capital gain of the firm for the year 2019-20. Now let us do the problem. First of all, you have to write computation of long-term capital gain for the assessment year 2020-21. So first step is write full value of consideration. Full value of consideration means sales price. Here sales price is given 12 lakh. We can write full value of consideration rupees 12 lakhs. Next step is we have to deduct if there is any selling expenses. So here in the question selling expenses is given, so we can deduct selling expenses 25,000. When we deduct selling expenses from full value of consideration, we are getting 11,75,000, that is net consideration. From net consideration we have to deduct indexed cost of acquisition. In this question cost of acquisition and fair market value is given. In such a situation, you have to remind one thing, that is, for computing capital gain in respect of an asset acquired before 1st April 2001, the assessee has been allowed an option of either to take the fair market value of the asset as on 1st April 2001 or the actual cost of the asset as cost of acquisition. Okay, here so we can compare fair market value and cost of acquisition, whichever is higher. So cost of acquisition is higher, 3,80,000. So we can index cost of acquisition itself. So you can write working note indexed cost of acquisition. The formula for finding indexed cost of acquisition is cost of acquisition into cost inflation index at the time of sale divided by cost inflation index at the time of purchase. Cost of purchase is 3,80,000 into cost inflation index at the time of sale, that is 2019-20 cost inflation index is 289. So into 289 divided by cost inflation index at the time of purchase, that is 2001-2002 cost inflation index is 100. So divided by 100. So we are getting 10,98,200. We can deduct indexed cost of acquisition 10,98,200. Again we can write a working note to find indexed cost of improvement, because in the question it is given that cost of additional construction. So we have to find indexed cost of improvement. So the formula for finding indexed cost of improvement is cost of improvement into cost inflation index at the time of sale divided by cost inflation index at the time of improvement. Cost of improvement is 3 lakhs. So 3 lakh into cost inflation index at the time of sale, that is 289 divided by cost inflation index at the time of improvement. So cost inflation index during 2013-14 it is 220. So divided by 220. We are getting 3,94,090.90. We can round off this to 3,94,091. We can deduct indexed cost of improvement 3,94,091. When we deduct indexed cost of acquisition and indexed cost of improvement from net consideration, we are getting 3,17,291. that is long-term capital loss. Okay, hope that you understood today's problem. Thank you.